Well, Sasha Seaton is an equity research analyst at Valuation Shares. It analyses both industry blue chip companies and small cap stocks with growth potential. Sasha is a fresh face on AusBiz and brings some fresh ideas. He joined us earlier and set up his stock pick by telling us about Shares and Value's investment philosophy.
So basically, Shares and Value is an equity research company. We basically look at small, mid and large cap companies. My role specifically is within metals and mining. Generally, when we look at small caps and mid caps, we need to look at a sort of diversified range. A lot of people are very bullish on gold at the moment. I like personally to look at sort of diversified investments in terms of where the company is going, sort of intrinsic value, whether it's picking up good projects and whether they have a good cash runway as well.
All right, so given your focus at the smaller end in mining and exploration, are you seeing many opportunities at the moment?
Yeah, definitely. I think small caps are definitely having a change at the moment. We've had a rough couple of years for the past 2 years or so, but it's definitely picking up, and I think sort of investors are looking for a little bit more growth within the portfolio, so it's definitely something that we're looking for, yeah.
So the stock you brought to us today is Trigg Minerals. What is it that attracted you to that? Initially, a gold explorer, but it's sort of pivoted now into antimony.
Yeah, definitely. So antimony is essentially a critical mineral that has defence, renewable energy applications. So one key point that I'd like to highlight today is essentially during September, China banned exports of antimony or put export restrictions on it anyway. And so that's essentially seen the prices go to over 50,000 Australian dollars per tonne, coupled with obviously demand, supply, drivers and geopolitical tensions to do with defence as well.
All right, so give us a little more background as to how this company is set up and where its projects are based.
Yeah, basically it's a Perth project, but so they've got New South Wales and Queensland projects. So it's antimony plays in New South Wales, just here locally, and then its Drummond project is located in Queensland, which is its gold project as well. So with obviously the antimony projects, we want to see JORC classifications as well, not just preliminary drilling results. So essentially that's one thing that sets it apart from its competitors. A JORC is essentially an exploration mineral estimate that's internationally recognised.
All right, so that's what come in at 610,000 tonnes.
Yeah, yep. So basically of that, about 15,600 of that is contained metals. So 10,300 of that is in the indicated category, and then 5,300 of that is in the inferred category. So basically you've got measured, indicated and then inferred categories based on geological confidence that the mineral's actually there.
All right, in layman's language, how promising is that?
Oh, it's definitely promising. I mean, compared to preliminary drilling results, it's definitely something that we like to see. And obviously when we're doing evaluation, we discount those back as well. So for an inferred category, we'd look at from anywhere from 75% to 90%. And then also additionally for indicated categories, we discount that by 50%. So we have a reasonable confidence that it's there, and then we reflect that in evaluation as well.
All right, so to be clear then, that's the antimony project, the Wild Cattle Creek deposit. Yep. You've got the Drummond gold project in Queensland's Drummond Basin there. So is that mainly gold focus?
Yeah, definitely. So there's very promising gold results there as well. It's 8.7 grams per tonne through preliminary drilling again, but its flagship program is the antimony project as well, which will really be the driver and the catalyst for its free cash flows over the next few years.
And then the Taylor's Arm project, what's that?
The Taylor's Arm project is one of its offsets of the Achilles program. So they've done preliminary drillings there, and up to 63% antimony has been recorded there. So really, really promising. So for reference, obviously we come back to Wild Cattle Creek, it had an estimate of about 2.6%. Which is very promising. Anything over 1% is considered really good.
Just returning to the value of antimony then, and you talk about China dominating the global market. What are expectations though going forward? And we've seen this with the US. They want to try and be independent as far as these critical minerals are concerned. So what role does an Australian company have to play?
Oh, definitely. I mean, a lot of global suppliers will be scrambling to try and find alternative sources and diversified supply chains. And so China holds over 60% of the global supply. And as of currently, we have 24 years of anticipated use before our supply runs out at current production rates. So it's definitely something to watch out for.
How many other companies are operating in this space? Well, in terms of antimony at least, the ones that maybe you could compare with Trigg.
Yeah, so basically there's about 7 or 8 players that have sort of a hedged two-prong approach, so whether they're doing gold and antimony. Generally, most of these competitors have essentially preliminary drilling results. So when we're looking at a peer analysis, we do include them on, and we obviously have to try and work out how much antimony they have contained as a resource estimate, and again, we discount that back. But in terms of having measured exploration activities in terms of a JORC classification, then Trigg is definitely in front of the competition.
All right, now are you across the valuation, or are you still in the process of trying to get a handle of that?
We finished the valuation yesterday, which is always a nice process. But so with our valuation, we essentially did a two-pronged approach. So we look at the free cash flows to the firm for the Wildcattle Creek, given it has obviously indicated and inferred resources. And then partially we also do a peer analysis to work out, okay, so if they sell however many assets they have in the ground left, what price can they sell that at and how much can they sell that? So that two-prong approach goes into a sum of parts, and essentially we can derive a valuation. Currently we're looking at around a target price of around 18 cents, up from around 3 cents of where it currently is. So it's a huge upside, and given the discounts we've put on obviously the resources of the company itself, it definitely speaks to itself.
All right. I do notice, though, in the past year, the share price is up about 300%.
Yeah, definitely. I mean, they've come a long way. And so previously they were doing sort of a potassium sulfate play, which obviously was a fertiliser, and that was a big sort of hike in 2019 and 2020 that we saw. So the company's definitely restructured itself as well. And so the market's obviously reflected that, but not to its true intrinsic value.
What of the fundamental price of antimony itself, though? Where do you see that going?
Yeah, I mean, as of currently, it can only continue, in my opinion. Our projections have it going slightly higher and continuing at a continual growth rate. I think we saw most of the growth this year, obviously with its current use cases in the demand in the first half of the year, and then obviously the supply chain risks that came in the second half of the year. So I'd say we're at pretty stable levels, and as of currently, I don't believe China's going to lift any ban on exports anytime soon.
And similarly with its other key resource in gold, what's your view?
I mean, everyone's always bullish on gold, and given geopolitical tensions and everything like that, it goes back to the gold standard at the end of the day. So, I'd definitely say we'll have a positive outlook towards gold over the next 2 to 3 years.
Are you of the view that it can continue to support the projects in both antimony and gold? Do they go hand in hand, or do perhaps further down the track they actually need to make a decision? Yeah,
I mean, that's a really great question, and you kind of go towards what their flagship is. So for our evaluation, we solely valued the Wildcattle Creek, because when that's got a flagship, we assume that they're going to proceed with that first, whether it goes through extra drillings, feasibility studies, and so on to try and get it into production. So we assume that their resources and their capital raisings have gone into that as well.
What sort of timeline have they flagged, just in terms of obviously, in terms of further drilling and heading towards production?
I mean, the company's had really positive news flow in the last 6 months, and they've been really, really bullish in terms of making ground, so to speak. And so we had projections over the next 2 to 4 years in terms of mining to do with free cash flows to the firm.
All right. So what are those key milestones then you're looking for coming up?
Yeah, it's a good question. So obviously we're looking for more drilling results in not just the Wildcattle Creek, but the other exploration sites as well. We want to see more positive grades, upgrades to potential sort of grades that are listed in the JORC classification. We also want to see a feasibility study done, so that was a step before production. We can assume that the company may perhaps go for a joint venture as well, which will take 50% of free cash flows to the firm when it gets to production. But so it's really about getting that feasibility done at the end of the day and making sure that's backed by positive drilling results to make sure that what's in the ground is actually there.
Now, when you're in the drilling phase and exploration, it does chew through cash. So how well funded is it?
Yeah, so it's recently had a $2.5 million capital raise, or placement, which is really positive. They've also recently issued some options as well, which will support their cash flows for the next 2 years as well. They may need to raise cash in the future, but given the current overheads are relatively low, then their cash burn is relatively slow, yes.
How key is management? Do you have a good chat with them? Do you get an understanding of what their philosophy is? I mean, is that critical in your thinking in terms of actually looking to buy a company?
Definitely. At an early stage sort of exploration company level, that's the key management. It's what drives it at the end of the day. They're what do the work in a day in, day out as well. So the key management, I'd say, has one of the biggest jobs of all. You want to keep the team relatively small due to overheads, but at the same time, they're the ones that are going to drive the growth.
So do those managers have a a background in previous projects for success?
Yeah. So the key management does have a background in obviously other projects, obviously other commodities more so. But what you want to see across the board is the fact that they've got a sort of geological understanding, they've had previous board experience, and then you've also got a finance manager as well to make sure that that cash runway is sustained.
All right, so obviously you're slapping a buy on this. Do you have a target price, or is that an open question at this point?
It's always an open question with a target price. Current indication, we have it about 18 cents, up from around 3.5 cents last time I checked. So we're looking at between 400 and 500% upside, but it is an intrinsic valuation based on its assets in the ground and their current cash flows that we project over the next 3 to 4 years. So we'd like optimistically to get to that, and obviously it's up to the shareholders and potential new shareholders to drive that.